Good afternoon, and welcome to the end of week market review for Friday, February 8th, 2013. We've got a few things that we're going to be covering today. We're going to start things off by taking a look at the market news and economic reports. We're then going to go ahead and take a look at some charts for both the S&P 500 and the Toronto Stock Exchange. While we're looking at these charts, we'll be looking at both the daily and the weekly charts on both short-term and long-term scales. We'll then go ahead and take a look at the volatility indicator. Now, unfortunately, we don't have any great pick reviews to review for this week. As we are all aware, the week did end up having a very flat and negative tone for the middle of it. But as we can see with today's report, we ended up ending the week strong just today. So, as you can see, the Wall Street is up with the Nasdaq near its 12-year high. Now, this was with some good earnings that have been coming out, despite the concern over what's going on in Europe. Now, the Dow Jones is still down 0.12% from last week's close, but the S&P 500 is up 0.31% from last week's close. So all in all, our average is pretty good. Now, if you take a look at the commodities, we can see that oil is up 0.06%. This is now putting it to $95.77 per barrel. Silver is also up 0.05%, putting it to $31.42 per ounce. We've got gold down 0.14%, putting it to $1,668.20 per ounce. And finally, our U.S. Canadian pair is up around 0.49%, putting it at $1.0027 pips. So we've definitely had a nice increase there. Now, if we take a look at the economic reports, more specifically, if we take a look at the jobless reports, we could see that it came through just a little bit higher than what the markets were expecting. That definitely did end up affecting the markets somewhat. Now here we are looking at the S&P 500 on a daily chart. You're going to see a few things. First off, you can see that we definitely did have some stalling throughout the week, but that we did end up working ourselves up into higher ground. Now we're still trading within the trend lines that have been put in place since the beginning and middle of December, but the MACD is still having problems breaking through the blue line. Right now we can see that it is a rising black line, which means we are rising bullish, but below the blue line. Now what's more important to note here is the fact that the S&P 500 is gaining ground while the MACD is losing ground. This is letting us know that there is definitely weakness in the market despite the growth that we're having. If we look at the S&P 500 on a weekly chart, you're going to see that we've broken out last week and still looking okay this week, but we haven't been able to surpass it in leaps and bounds. Taking a look at the S&P 500 on a broader scale, looking at the last 5 years, you can just see how significant the growth has been since 2011, but even further back since 2009. While looking at the TSX, you can see that it's up against some overhead resistance around 12,800. Now it's just barely breaking through, but we know that the amount of breakthrough is pretty insignificant for what we're looking at. Now we also see that the MACD is flat bullish with the black line down below the blue line. So things are definitely not looking very good for the TSX with some overhead resistance and a weak MACD. Looking at the TSX on the weekly chart, you can see that it is still doing pretty good considering the daily chart is showing some pullbacks. We've seen most of our growth since the beginning of May here. While looking at the TSX on an even bigger picture, you can see just how much more growth there is for the TSX before it ends up reaching its 5-year highs. We've got significant humps that we'll need to cross, where it's working itself up and beyond 15,000. While looking at the volatility indicator, you can see that it's currently at 13.08, which is up about 1.40% from last week's close. Now it's important to note that the volatility indicator is still pretty low, even though it's not as low as it was in the weeks prior to. We know that the volatility indicator can trade very happily between 14 and 16, as you can see throughout September, October, and even most of November. We don't have to be too concerned with what ends up going on, even if the indicator does work itself up. The point that we would start to show concern is when it gets beyond 16 and starts to trade higher, with some real concern obviously happening when it gets into the 30s, something that we haven't seen for quite some time. If you have any further questions, feel free to let us know. You can either contact us at our email address or our phone number, both of which are listed right here. And as always, we encourage you guys to continue to paper trade and always make sure that you're trading by the disciplines, especially when you're trying new things out. Obviously though, any trading decision that you make is your own, so make sure that you're trading with caution. Now with that said, this has been the end of week market review for Friday, February 8th, 2013. Ciao for now.